Alrighty. Hello, everybody. It's either Monday night or Tuesday morning. Could even be Tuesday midday if you're over in Europe or Asia right now. But I would love to give you guys a quick breakdown on what just happened with Bitcoin's new all-time high, made, I guess you would say, during the morning hours of Tuesday, UTC, and it crossed about 68.5K, obviously for the first time ever. The previous one happened right around here at 60. If I zoomed in right here, which I won't right now, it actually crossed just above 67 before retracing around this time. And after a bit of volatility we saw over the past, give or take 2 weeks or so, we finally made a big, strong push all the way up to just above 68.5. And we're just a little bit below that now at about 68K at the time of this recording again. I'm starting off here by breaking down a little bit of a look at the exchange inflow and outflow that's going on with Bitcoin right now. The red here is the inflow happening over time. The yellow is the outflow. You'll notice that looking at the red versus yellow over time, it looks essentially close to a mirror image, give or take just a slight imbalance between the two if you were to really take the plus or minus of the inflow versus outflow at any given time. And that is exactly what this pink line does. So I'm going to actually remove some of the noise here, make it just a little easier to see. And now we're left with just the balance of the inflow versus outflow over time and the price line, of course, which is in 4-hour increments right now. We're looking at kind of a zoomed out perspective with about 6 months of data here. And I'm going to zoom in just a moment, but I'm going to make the flow balance just a little bit more granular. We're going to really look at about 15 minutes here and see what we see. So the big thing to look at when you're looking at exchange flow balances, especially when there's like a price decline going on and you suddenly see a big spike in the positive direction, that would indicate that there is a large amount of Bitcoin moving onto exchanges. And when any funds move onto exchanges, it's generally more of a bearish signal than a bullish one. Usually when you'll see a big spike in the positive direction, that means that there's going to be a bit more of a sell-off, or at least a risk of one, right? This is by far, it's definitely not just a end-all be-all metric that you can rely upon to see where the price is about to go soon after you see one of these spikes. However, it is indicative of where funds are typically moving. And if you are a bull in the market, which most of you who are watching are, you want to see a lot more of these and these and these really big exchange flow balance spikes in the negative direction, which is implying that funds are moving off of exchanges and into cold wallets where they can't be sold off, or at least not in the traditional manner. And that generally is more indicative of a rise. If I were to say it had as much alpha as an inflow spike, that probably would be false, because we objectively know that when funds are moving to exchanges, there's only one outcome typically, and that's either do nothing or sell off. But when something is moving off exchanges, it could mean they're just biding their time. They still might sell off next week, but there's no action that someone who is moving funds off exchanges can do to actually make the price go up. It just means that there is confidence in those coins from, whales, or someone who really has a large stake in Bitcoin or whatever asset you're looking at. Long story short, if we were to zoom in to, let's just go to about the past 3 weeks or so, right around there should do it. We see plenty of spikes here. This inflow back on October 21st happened in tandem with a big drop going from about 64.8 all the way down to 62.8. So about a $2,000 drop just as this flow balance happened. we had a little bit of a rebound, and then another big inflow spike that happened after the price already moved down, but you can see that there really wasn't any outflow spike to counterbalance, and the price kind of moved further down. We had one more big one here, and then it actually began to rise, which is interesting. And after it did, we had a huge outflow spike. Uh, Obviously, traders moving their funds to cold wallets in large numbers, and the price moved up a little bit more. Now, this is a very granular look, but my point is looking at all of these high inflow and high outflow spikes, you typically see at least a short reaction to it, especially if it's a very large spike. So the really big ones here, give it a little bit of time, and eventually there's going to usually be some sort of price move in that direction. The latest one happened on November 8th, and the price climbed, give or take. Let's see, the spike occurred at November 8th, 5 p.m. my time. And the big spike really started to occur just about 6 hours later. I guess you could even say sooner if you count this upswing right here. But long story short, there hasn't been any sort of inflow spike to be concerned about right now, which is a great sign for a time when an all-time high just happened. For example, when this all-time high happened a couple weeks ago, we had this big inflow spike, which of course there was a big outflow right after, but then another big inflow spike, and the price kind of dipped down, punished the people who were really FOMOing in at that all-time high. But this time around, at least as of yet, and it is kind of, the later hours for the US right now, so there's not as much trading going on as there normally is. But it is a very solid sign that we're not seeing any sort of big inflow spikes, and I'll leave it at that for now because I have plenty of other metrics I want to give you guys an update on. Next up would be circulation here. I'll make the screen a little bigger for you guys. So token circulation, I won't spend long on this. It's staying pretty steady. It's not exactly rising up, which would be the thing that makes the most sense when price is rising. You want to see a steady increase of unique tokens circulating on the BTC network as the price is rising to justify more and more utility over time. And that is what propels prices upward in cryptocurrency, no matter what asset you're talking about. Before I go down to some other on-chain metrics here on Sandbase, I'll show you our related NVT model, which is essentially this circulation that we just looked at here. And it's being divided by the market cap at any given time. And this model is essentially a macro perspective of market cap divided by token circulation. And when things are red, that means that the price, or I should say market cap, divided by token circulation is indicating a lack of token circulation for where the market cap is. And that's when you see these corrections and some volatility. Yes, the price was still able to rise a bit on the reds. That is rare if you look historically. That doesn't typically happen. It did here. But more often you want to see green bars, yellow green here or solid green here, indicating semi-bullish or bullish signals respectively. As soon as things got bullish here in October, price took off. Circulation has stayed very solid. We actually, on the all-time high day we just had on Monday, got a very solid NVT score, this hash mark being well below the November average so far, which is of course only a week old, but it's a great sign that we are staying in that semi-bullish territory. These trend lines here are what the color is based off. So if we start to see a few more days like this, it would fall back into at least neutral territory. But for now, very healthy circulation. So great sign there. Let's scroll down. Take a quick look at MVRV. Actually, before we do, let me do active addresses. Now, this is a little more concerning. We had peaks of unique active addresses occurring on October 7th, big peaks right after the all-time high on October 21st, another one here on November 3rd. But since that time, we've kind of had a mild drop off. I wouldn't look too much into this. This is the weekend. As you can see, all of these big valleys here are Saturdays and Sundays where trading kind of stagnates. People take the weekend to breathe. There's just not as much trading volume. That being said, on our all-time high day, we actually did not reach 1 million addresses on the BTC network. And most weekdays, outside of a few, have been eclipsing that 1 million mark. So a bit surprising to see how few addresses have been involved. That being said, many coins are still being involved. So it's kind of a double-edged sword when you look at these two prime on-chain metrics here. I would call this kind of a neutral signal when you combine active addresses being a little bit short of expectation, but circulation looking very healthy right now. Now we'll get back to MVRV here. We really love this metric. We typically find that anything over about 15% here is the danger zone. MVRV, for those unfamiliar, measures the average trading returns over a 30-day perspective in this case, but you can look at all sorts of different time frames ranging from 1 day all the way to 5 years, even 10 years for Bitcoin. But typically for the 30-day, it's a nice mix of long-term and short-term traders and really has a pretty steady alpha when it comes to where markets will be going next, especially when they're in extreme, I guess, tiers right above this line that I've just drawn at 15%. So when we got here, right before the all-time high, yes, we were able to climb despite it being a bit in the danger zone, but look at the big correction that allowed the MVRV to cool off and let those 30-day trader returns get a bit punished if they were FOMOing up around here. And we actually got all the way below zero just a few days after the all-time high, I should say about a week or so. But look where we are now. We have been climbing up, but we're still at kind of a, I don't know, I'd call it mildly bearish spot of about 8.8, 8.9%. And as long as we're still staying below the 15% mark, it indicates this rally can continue to climb, just like it did here, especially when we went from, on September 28th, we were at 41.5, and obviously we climbed all the way up here. We'll even say right before we got into the danger zone, if you look at that MVRV. So even before we hit the danger zone, the price had jumped about 23.3%. And that's what I'm talking about. Basically, just staying in this middle range here means that Bitcoin is not in that serious risky zone that it normally might be. And of course, if you want to really find opportune times to buy in, that's when the MVRV metric is negative, and it would indicate that you can buy in at a time when there's blood in the streets, if you will, and many people are panicking and fudding out, as we've talked about many times on our videos in the past and our This Week in Crypto streams. You want to buy ideally when nobody believes in an asset, and you want to sell when everybody and their family believes it's going to go to $1 million overnight, right? And we have seen signs of euphoria. I'll touch on that just briefly here in a bit. But for now, it is trading returns are not in a scary spot, which is a surprising and good sign when we just hit a pretty big rally going all the way above 68.5K. Social volume and dominance. So just as I mentioned, euphoria has, of course, been there, as you would expect when an all-time high happens, but nothing really extreme. We haven't seen any signs of social volume or dominance spiking like crazy up here, like we did right before the last all-time high happened. Typically, when you see these spikes, especially for smaller assets, it's a signal that the price might have at least a temporary turning point. So when Bitcoin is being discussed a lot, look at that as a signal that it might be time to either take profit or add to your position, depending on whether it's being talked about because people are worried or because people are euphoric and think that it's just free money to help them get that Lambo they've been coveting for so long. So long story short, nothing crazy on the social volume and dominance side. We saw a little bit on the weighted sentiment side, but nothing really of significance. And that is definitely more a good sign than bad when it comes to something as significant as a new all-time high. Funding rate. So we'll look at one of these at a time. Typically, you want to see funding rates in the negative if you are at in the most ideal spot for Bitcoin to rise. And lately, we have been in a high zone, not absolutely incredibly high, but enough where it is a concern. This essentially means that longs are paying shorts at a less, or I should say, a less common time than usual. And because of that, we are seeing a lot of volatility around here. You can see when it got really high, this yellow spike right here, that was an indication that people were leverage longing to an unreasonable degree, and it caused Bitcoin to quiet down for at least a little bit until funding rates started to hit back down here. And once it was back in a reasonable spot, that's when we see this huge spike. It wasn't because of funding rate, but when you see these huge spikes in funding rate, usually there isn't much left for Bitcoin to do on a rally until things cool off, just like we saw with the MVRV. So you can consider, I'm just going to ballpark it right now, but something like 0.06% for just the Binance one. I'll just take off FTX to make it a little easier. When you see these extreme cases here, those are the danger zones, just like we looked at for MVRV, and you want to avoid these and these as much as you can. And on the other side, if you want to get into severe fear range, something like negative 0.025 I've seen as a pretty good bottom indicator. So right now, again, we are in a slightly euphoric stage, but I can zoom out and show you that there have been many spikes that have been much larger than this. If you go back to like the beginning of the year, especially February, you can see these just absolutely insane Binance funding rates where it got up to about 0.25% at one point. We're nowhere near that now, but all things equal, we're in a more concerning stage right now than we are an incredibly lucrative one where everyone should be buying in. All right. I'll skip FTX funding rate because it's essentially doing close to what Binance funding rate is. And Binance, I've seen, has a little more alpha. So we'll just stick to that for now. If you have more questions about it, make sure to tune in for This Week in Crypto on Friday, and we'll be happy to answer some more questions and dive deeper into funding rates for not just Bitcoin, but plenty of other assets, as you guys know. Active addresses, we already touched on that. Mean dollar invested age, this is an interesting one. So we're looking at the last year now. I'll actually zoom out to the last 5 years because this is a great macro indicator. What mean dollar invested age is really good at is justifying whether a rally is happening in unison with dormant coins moving in a healthy manner, stagnation kind of dissipating so that prices can continue to rise. You can see the real big dips here, going back to 2016. That's when the rallies continue, like just really start to rip up. And it's obviously a little hard to tell because this isn't on a logarithmic scale, but these were huge percentage gains at this time. I can even hold down shift and drag my mouse cursor, and you can see that between the end of 2016 and the end of 2017, Bitcoin went on just a modest 2,577% gain or so. That's what I'm talking about when this mean dollar invested age line is dropping like it is here. That's an indication that dormancy is going away, and the amount of wallets that are just hodling and not doing anything are shrinking. And that means more circulation and more opportunity for prices to rise. Technically, what this particular metric does is it's measuring the investment age of the dollars invested in Bitcoin. So we also have one that's measuring the age of just the coins, but we found that the actual dollars invested provides a little more clarity into where prices can go next and whether the amount of percent gains that we're seeing is justified by dormant investments moving. So more recently, October 2020, we had a big drop here. This is still about a year ago, and you can see what this did to the price. And now we're in a spot where the price is still ripping up, as of about mid to late September. And we saw a flattening out period followed by a dip in the mean dollar invested age curve, which is great. It's certainly not on the level of this kind of dip where the mean dollar invested age was like 430 days in mid-October, and by the time it got to April, it was at 179 days. That's a pretty crazy dip, just like this one was. But we are going down, and that's a good sign. What we do want to be concerned about is when prices are moving up, but the dormant investments are remaining. And that's when you'll see these kind of big corrections because there's just not enough justification for the price to move up quite this fast. And of course, as mentioned with other metrics, this is not the end all be all. Prices can still contradict this all the time, but if you compare averages and historical evidence, you're going to do a lot better when the mean dollar invested age curve is moving down, which it is now, but very slightly. So keep that in mind. And even if I zoom in here, you'll notice, there we go. You'll notice that it's actually kind of started to creep up a little bit. So it's going to be very interesting to see how the dormant investments start to move as a reaction to this new all-time high that just occurred. All right, a couple more. Weighted sentiment. This is an interesting one. We're looking at 1 day's. Let me zoom out a tiny bit. We'll just do the last 3 months. So we're looking at spikes in weighted sentiment, which is multiplying the amount of social volume for Bitcoin by the ratio of positive versus negative commentary about Bitcoin. So just like MVRV, just like funding rate, when you see high spikes, it's a bad sign. When you see low spikes, it's a good sign, assuming you're a bull. So when people are fearful or not talking about Bitcoin a lot, that's when you see these rebounds. When you see people euphoric, like this all-time high that happened back about 3 weeks ago, and this kind of rebound here that happened about a week ago, that's when you see price corrections. But after this price correction started, the crowd really seemed to believe that we were just going to continue sinking down here, and they started to get negative and do what's known as FUD, fear, uncertainty, doubt. And when that happens, the price can actually rebound back up because whales who are looking for a good opportunity to buy cheap Bitcoin, and they see that there's kind of blood in the street and a little bit of a stagnant kind of perception of Bitcoin compared to the norm, that's when they really can push up the price. We did start to get euphoric right about here, and this is kind of our incomplete signal. So don't take this one with a grain of salt because it usually means that there's still a little bit of time remaining on this current candle before it completes, and we can see whether people are kind of euphoric or expecting a quick correction. If they're expecting a quick correction, use your Sandbase Pro account and check how this candle that I'm looking at now ends up, because that's going to be a big signal for whether we continue to climb up and hit 70K for the first time. It's certainly within reason, especially because the majority of the metrics we've looked at thus far are showing a little more bullishness than they are bearishness. Last but not least. So this is the combination of 100 to 10,000 coin wallets in terms of their percentage of supply held of Bitcoin. And when things move up, that generally is an indication that prices can move up Two, this particular tier of traders has a lot of weight in the markets and can really have an impact on whether price direction is on a long-term gain or long-term correction type of path. Pink line here is the 100 to 1,000 tier, and red line is 1,000 to 10,000. You can see the 1,000 to 10,000 wallets in particular, they've really been dropping down a lot. I find that quite interesting, especially because despite this, the price has kind of stayed stagnant and then ripped up to a new all-time high. And that doesn't typically happen. It's usually, the red line here in particular is a very good one to keep an eye on in terms of future direction of the markets. But I'll take these off and just look at the merge line, which is taking the 100 to 1,000 and 1,000 to 10,000 together and stirring them into one combined line that is currently indicating we are on the way down and have been since about October 24th. We went from, these addresses have dropped about a modest 1% of their holdings between October 24th and now. So give or take 2 weeks, they've shed 1%, but we have ripped off another major gain and obviously hit above 68.5 for the first time. I would call this a bit of a bear signal. This is a bit of a concern because of the fact that this tier has had a propensity to really dictate where future prices move. And this could indicate that there's a bit of fool's gold, unless, of course, these whales begin to start buying back in. That would be a good indication that they've changed their mind and don't want to wait around for the price to dip back down. And they just want to start pushing the prices up to more and more unheard of prices that Bitcoin's never experienced before. I'll even give you guys a quick snapshot at what the last year looked like for this tier. And you can really get an idea of how their behavior has a nice leading aspect to it, especially going back to late December of last year. You see this huge gain here where they went from December 17th to December 31st, the last day of 2021. They added 1.8% of Bitcoin to their bags. That is massive. And then even after they started to correct here, you can see the price kind of lags behind. And if you're watching this, you'll see that a week or two later, the price may follow. Same thing here. We had another rip up. And it's almost eerie how the shape of their accumulation kind of was matched a couple weeks later by the price. And then they fell back here in early February. The price fell a couple weeks later in late February. But the long-term trend here was still up. You saw we, of course, made that first all-time high of the year in mid-April, getting up to about 64.6 before this massive correction began that most traders aren't aware of, the fact that whales are shedding a significant amount of their supply, and eventually there's this big correction down. Once the correction down happens, they start accumulating like crazy again. And yes, the price continues to kind of just slowly drop down, but eventually, with the whales accumulating, they get rewarded, and so on and so forth. We had the big rise up until about October 24th or 25th. And since then, they've been taking profit and dumping a bit of Bitcoin. This is not nothing. This is 1% of their holdings. And I can change this to balance instead. So I'll go balance of addresses. I'm going to take off everything. And I'm just going to merge. Actually, I'm going to go absolute here. And then I'm going to merge 100 to 10,000 altogether. And from the 24th until now, they have dumped about 86.4K of their Bitcoin. And that's an absolute mammoth amount. So at some point, unless they start to bounce back up again, that's going to be a serious concern. That being said, we've got some pretty evenly split metrics here overall, guys. Some are showing that we still could easily climb up to 70K and beyond. If I were to give this a total rating, I'd probably call it just a bit on the bearish side because things like MVRV and whale behavior and funding rate are three of probably the top five uh, most alpha metrics in terms of really giving a concrete uh, snapshot of where prices will go next. So with those three looking a bit concerning, I'd be a bit concerned about where prices go next. Obviously, I'm not going to give any investment advice, just as we at Santiment never do. Um, we've been wrong many times we've been right many times. I just want you guys to proceed with caution, use these metrics to your advantage, and really watch how the next couple of days end up playing out now that we've cracked really a third landmark all-time high of the year. There's going to be euphoria. Some people are going to get more doubtful than they were just a few days ago. And we'll see how that polarization sort of culminates with exchange inflow, outflow, and everything in between. All that being said, I want to remind everyone that we do have a promotion going on between now and Thanksgiving. If you want a Sandbase Pro account and have been waiting for a time to get it for cheap, now is your chance. We have code SANGIVING21 up right now to give all of you 35% off of your first billing cycle, whenever that is, whether it's a month or a full year, and we will ensure that you get all set up. You can talk to us on our support email if you have any questions, and I'm looking forward to chatting with you guys a bit more on Friday on our This Week in Crypto stream. For now, take care, be safe, and we'll be chatting with you very soon. Bye-bye.